to the non-agro space then, where the crude prices continue to languish around $112 per barrel. The data out of China today spooked the oil markets. The Chinese trade surplus has widened, highlighting a slowdown in the economy, which in turn has raised concerns over energy demand. The Brent crude is currently trading around $112 a barrel, while the NYMEX crude price is just about holding that $96–97 a barrel in the European markets right now. The gold prices in the meanwhile have moved a tad higher today, but the sentiment in the yellow metal continues to remain fragile. We have seen the Indian prices also back around 29,000 rupees. Oh, that has declined quite sharply right now, 1% down, but that's really because of the rupee movement here. The international markets in the meanwhile holding around $1,590 per ounce. Let's go across then to Viral Shah. He's head institutional business, Geojit Comtrade, and he joins us in the studios. Viral, hi, welcome to the show. Let's start with the gold and silver prices first, and no safe haven buying, very sharp declines, 4-month lows onto that one. How are you trading?
Well, we have seen quite a steep decline in the international markets for both gold and silver. Silver broke its crucial support at about $30 and now is close to about $29–20. So, I think at this point in time, we would like to play on a slight technical bounce back because the market has corrected fairly sharply in the last 1 week itself. Both in gold and silver, I think for today's trade, we are looking for a slight bounce back from the current levels. In gold, at about 28,420 could be a good buy for a rally till about 28,600 to 28,800. Similar is the case with silver as well. I think 54,500 is a good support for the market, and I think a plus minus 200 rupees you can start accumulating for a potential target of 55,300. So it's a very short-term trade, but yeah, we are looking for a technical bounce back for today's trade.
So you're buying on dips today, Viral, but do you think sell on rallies going forward could be a strategy, or would you rather stick it for the intraday market today?
Well, very difficult to say because, apart from the international markets, it's also the rupee dollar market which has a big say in the price direction right now. 54 on the rupee dollar is where we have seen a good amount of intervention from the RBI, and the market is holding on to that level quite aggressively. A break above 54, then can open rooms to about 55, 56, and thus the entire dynamics of MCX traded gold and silver prices goes for a toss. Whereas, even a steep decline in the prices internationally won't result in such a big decline in the local markets. But if we take 54 as a base, then I think the markets internationally are trying to claw their way back to about 1600 to 1620 for gold and approximately $30 to $31 for silver. So yes, the move is to play on the bounce for the time being. And if the rupee remains stable, then possibly we will see some further gains before again, where it hits the resistance at about $33 or about $1620 to $1650 in gold.
How about the energy space? Because while we are holding $95 in NYMEX, 110 hasn't reached for Brent as well. But would you say that the fundamentals really look bullish, bearish right now?
Well, fundamentals were bearish for a while, but it's just that the risk premium with the Iran crisis is what had kept the market propped up for a while. I guess in the last 1 week, what we have seen is a good risk-off trade for energy prices, where you have seen the WTI correcting from 106 to about $95, $96. And that's a big move. We are talking about almost about a 7–8% move in the market as such. From current levels, we are expecting a slight amount of bounce. Even on local MCX, we are expecting a bounce to about 5,200 to 5,220 levels. But yes, the upside momentum has been broken. I think it will be difficult for crude to regain $106, $108, which we had seen earlier this month. And possibly a sell on rallies would be the order of the day for crude or energy prices.
Would you say similar for natural gas as well?
Natural gas is more of a contra trade. Most of the participants in India prefer to hedge their bets on natural gas whenever they are going short on the other markets. Unfortunately, what happens with natural gas, and quite similar to other markets as well, is that every expiry there is a huge premium that you have to pay. So, current prices are about 132, 134 has been a good level where we see some amount of resistance now coming in. So possibly we would like to go short at current levels with a potential target of 125.
How would you look at the base metal sector? Because the US data has been mixed. Excuse me, the Chinese data hasn't really been very supportive, and the Eurozone concerns are something that would continue to weigh onto the prices. But with the kind of declines that we have seen in last 2 or 3 sessions, do you think it's overdone?
Well, base metals to a certain extent has been lackluster in terms of price movement or direction. For the last 6 months, we have seen the markets hover in a very tight range of about 50 to 60 rupees in the case of copper, or roughly about 100 to 200 rupees in the case of nickel. These are lower end of the price range as such, and if nickel breaks 900 or copper breaks 420 levels, then we'll see further correction. For the time being, I think copper is showing some good signs technically, and I think possibly a rally back to about 439, 440 cannot be ruled out from the current levels. Nickel on the other end has shown a decline. The charts are also not looking very positive, and I think possibly a test of about 905 or below 900 levels can be the order of the day. Other than that, zinc and lead are moving in a very tight range, so you can probably pay for a 2 or 3 rupee movement as such, but no great direction as such in the market.
How would you look at the copper and nickel prices? Because while copper did touch a 3-week lows, nickel is 1 month on the lower side. And we've seen nickel as the only metal in the whole of this base metal sector, which actually is trading negative for this year, 8% down in 2012.
Well, we rarely talk about fundamentals of any particular commodity because we more or less concentrate on the technical side. The fundamentals for nickel have been weak for a while due to overcapacity and also lesser amount of offtake. And, I think data out of China is what drives the base metal prices. So a weak data out of China definitely impacts both these commodities, but nickel to a larger extent than copper at this point in time. Copper again is the joker of the pack because the weakness that we've seen on other commodities is not exhibited in copper as such, and thus it is showing good signs where you can play for a contra trade for the time being.
Viral, how is it all looking on the charts for a slightly longer term? Because, of course, intraday you feel that buying on dips is a strategy because we have seen a huge amount of decline coming in. But for the medium term, how are the charts looking with so much of a damage that we have seen in this quarter?
Well, the charts are definitely weak. Again, it's very difficult to actually plot on the MCX because of the rupee factor. And like I said, again, if the rupee starts declining against the dollar again and probably will touch 55 or 56, then we will not get to see the same amount of correction that we would have seen otherwise. But apples to apples, if you're looking at the international market, yes, we are at lows, and it is at a very crucial support in most of these markets. So if the markets were to, let's say in the case of precious metals, dip below 1580 or 1550 levels, or in the case of silver below $27 or $28, then it can open up room for further price correction. And so we are at a very crucial juncture in the international markets. If the fundamentals don't improve, or if there is less amount, there is a more risk aversion policy for commodities, then we can definitely see more downsides.
All right, we'll let you go at that. Thank you so much for joining us. That's the view coming in from Geojit, more bearish than bullish in the medium to long term. But for today, they have a buying strategy for gold, silver, crude, copper, all of those commodities in the intraday market.